Do you really believe that a $25 stock can outperform a $600 one? Today, we're going to uncover this truth. Hey everyone, this is Gray Investor, and today we're addressing a question that leaves many investors pondering. Can a low-cost stock really be a better choice than a high-cost one? At first glance, the stock price seems like everything, but the truth is, it's just one part of the story. In this video, I'll be sharing a straightforward and practical analysis of major tech and AI companies. We'll discuss the growth potential, stability, and challenges of each, along with an honest opinion on where we think the best investment opportunities lie. So, if you want to keep learning how to fully assess a stock and not miss out on this rocket to the top, subscribe to the channel now. Enough talking. Let's get straight to the point. Starting with Apple, currently trading around $226.96. A giant in the market, Apple is recognized for its solidity and innovation, being seen as a safe bet in the long run, with a solid brand and loyal customers. This high price reflects the strength of the brand and its market position, but Apple's value goes beyond the stock price. With investments in AI and augmented reality, the company still has room to grow, especially with new products and technologies on the horizon. For those seeking stability and a solid track record, Apple is an excellent choice. Its growth potential is more controlled compared to smaller companies, but it's still significant for those aiming for the long term. Now, what's your opinion? Do you think Apple is still worth the investment? Comment below. Microsoft, with shares around for $120.50, is one of the most established companies in the tech sector. Known for both its software ecosystem and innovations in cloud and artificial intelligence, Microsoft is viewed as a solid and reliable growth company. This high price reflects its strong market position and ability to adapt to new technological demands. For many investors, Microsoft represents a safe bet, especially for those seeking stability and consistent growth. The company's value goes far beyond the stock price, with expansion projections tied to AI development and cloud solutions. Even with a higher price, the company continues to innovate, strengthening its long-term potential. Alphabet, Google's parent company, currently has shares around $178.35. As a leader in the tech sector and a benchmark in innovation, Alphabet is much more than just Google search. The company is strongly positioned in areas like artificial intelligence, digital advertising, and video platforms, making it a diversified giant with multiple revenue streams. The stock price reflects Alphabet's solid market position and continuous growth potential. With a focus on AI and business expansion, the company maintains room to advance at a steady pace, making it a reliable choice among long-term investors. For those seeking exposure to a diversified portfolio within the tech sector, Alphabet can be an excellent bet, with solid fundamentals and opportunities in strategic areas of innovation. With shares around $208.18, Amazon is an e-commerce powerhouse and also a leader in cloud computing through Amazon Web Services (AWS). Although primarily known for its impact on digital retail, AWS is one of the company's most profitable and fastest-growing areas, ensuring strategic diversification for investors. The stock price reflects both the value of its global infrastructure and its dominance in multiple segments, such as logistics, streaming, and artificial intelligence. The company continues to expand its reach and invest in innovation, contributing to its established position and consistent growth. For those looking for a company with diversified revenue streams and a solid history of expansion, Amazon is an interesting option. Its initiatives in AI and technology indicate long-term potential for investors seeking continuous growth in a dynamic sector. So, what do you think of these tech giants so far? Which one do you consider the best choice for the long term? Share your opinion in the comments, and don't forget to subscribe to catch the upcoming insights. Meta's shares are currently around $589.30. Known for its leadership in social media with platforms like Facebook, Instagram, and WhatsApp, Meta is in a transformational phase, with an intense focus on augmented and virtual reality technologies, including its metaverse project. This investment in the digital future sets it apart in the market, but also brings adaptation and growth challenges. The stock price reflects both Meta's current dominance in social media and the perceived risk and potential future returns with the metaverse. For many investors, Meta remains a valuable company, but its focus on the metaverse makes its growth more risky and less predictable in the short term. For those willing to invest in a long-term vision and who believe in the digital transition Meta proposes, the company could be an intriguing choice. However, it's worth considering the volatility of this investment, given the bold nature of its initiatives. With shares around $321.22, Tesla is widely recognized as a leader in the electric vehicle and sustainable technology industries. The company is also exploring the development of clean energy solutions and AI innovation, especially with its autonomous driving software. These factors position Tesla as one of the most innovative and fast-growing companies. The high stock price reflects the market's confidence in Tesla's long-term potential and the vision of its CEO, Elon Musk. Although the company still faces challenges with large-scale production and increasing competition, its leadership in innovation and sustainability is a significant differentiator. For investors with a higher risk tolerance and looking for aggressive growth, Tesla could be a promising choice. However, volatility can be high, so it's essential to assess whether the risk profile aligns with your expectations. NVIDIA shares are currently around $147.63. NVIDIA stands out as a leader in the graphics processing sector and, more recently, in artificial intelligence. Its chips are essential for areas ranging from gaming to high-performance computing and data centers, giving it a strategic position in the tech market. The stock price reflects both the strong demand for its GPUs and the future growth expectations in the AI sector. With a well-established position, NVIDIA continues to innovate with new products and strategic partnerships that expand its market possibilities. For those who believe in the potential of artificial intelligence and want to invest in a company with a history of innovation and growth, NVIDIA is an interesting choice. Despite market fluctuations, the company demonstrates resilience and adaptability, reinforcing its long-term value. And you? Are you already invested in any of these innovation-focused companies? Which one do you think will lead the market in the coming years? Share your thoughts in the comments and stay tuned for more investment insights. With shares currently around $189.25, Oracle is one of the giants in the corporate software and database sectors, with a strong presence in the cloud computing market. Known for its stability and robust solutions, the company has been investing to expand its cloud presence, competing with other big players in the sector. The stock price reflects Oracle's strength in the enterprise sector and growth expectations in cloud computing. Although the company does not exhibit explosive growth, its solid customer base and transition to cloud solutions provide a steady path forward. For investors seeking stability and exposure to corporate technology, Oracle is a solid option. With a more conservative focus, the company is ideal for those who prefer safer, gradual growth. Currently trading around $213.72, IBM is a veteran in the tech sector, known for its influence in areas like artificial intelligence, cloud computing, and enterprise services. In recent years, the company has focused on transforming its business model, expanding its cloud and AI offerings to compete with other tech giants. The stock price reflects IBM's stability as a reliable choice, though its growth is more gradual. IBM is focused on repositioning itself in the tech market with a solid corporate client base that continues to ensure steady revenue. For those who value a traditional company and want exposure to AI and cloud sectors with less volatility, IBM might be an interesting option. However, it's worth noting that its growth pace is more conservative, suited for investors seeking safety and predictability. Intel's shares are currently around $26.20. As one of the world's leading semiconductor manufacturers, Intel is a key player in the tech sector, providing processors for computers and data centers. In recent years, Intel has faced market challenges due to growing competition, but the company is working to regain its position with investments in new technologies and increased production capacity. For investors looking for a buying opportunity at a more affordable price and who believe in Intel's ability to innovate and grow again, this could be an interesting choice. However, it's important to consider the risks and the time needed for a possible recovery. Now that we've explored some of the major tech companies, it's essential to understand the importance of thorough research before investing. Many beginner investors rely solely on the stock price or short-term trends, but real success comes from deep analysis and understanding a long-term potential. A complete research process involves reviewing the company's financial history, its market position, innovations, and growth strategy. Analyzing financial reports, comparing with competitors, and following industry trends are fundamental steps. Additionally, it's crucial to understand how economic and technological factors influence each company. Investing without solid research is like navigating without a map. You might reach somewhere, but it's more likely you'll end up lost. To invest safely, remember that research is your best ally. Another essential aspect for any investor is understanding ROI, or return on investment, and how it relates to a stock's stability and volatility. Stocks of more established companies, such as Apple or Microsoft, generally offer a more stable and predictable ROI, attracting investors who prefer long-term security. These companies are seen as less volatile and, therefore, less risky. On the other hand, investors like Cathie Wood of ARK Invest show us that volatility can be a major opportunity. Cathie bets on companies with high growth potential, even if it means facing price fluctuations. She views volatility as a chance to capture substantial long-term gains, especially in sectors like artificial intelligence and electric vehicles. For those seeking faster returns and with a higher risk profile, volatility can be an advantage. Understanding the relationship between ROI, stability, and volatility is crucial to aligning your expectations and choosing the investments that best suit your profile. For any investor aiming for sustainable results, it's essential to look at a company's fundamentals. Aspects such as cash flow, revenue, debt, and innovation capacity form the basis of long-term value. Cathie Wood, one of the most influential voices in innovation investing, reminds us that beyond financial numbers, it's crucial to identify companies that are transforming the technological landscape. Cathie bets on cutting-edge companies that, while showing unstable short-term growth, have the potential to revolutionize entire industries. This focus on companies with innovation fundamentals allows Cathie to capture opportunities that, in her view, have the power to reshape the market in the long term. Following this vision, before investing, it's worth looking beyond the numbers and identifying the value of companies that are leading the change. With all this in mind, we see that the value of a stock goes far beyond its price. Each company brings a unique combination of stability, growth potential, and fundamentals, and investment success depends on understanding these aspects and aligning choices with your profile. Among the companies we reviewed, our top choice is Microsoft. We believe it combines the essential factors for solid and continuous growth with a reliable history and robust investments in artificial intelligence and cloud computing. For us, Microsoft stands out for its balance between innovation and stability, making it ideal for those seeking security with potential long-term appreciation. Now, we want to know your opinion. Which of these companies would you rank first? Do you have any stock on your radar? Leave your comment below. And if you enjoyed this content and want to learn more about making informed decisions, subscribe to the channel and join us on this investment journey.